I want to share your journey with the audience because there is so much of inspiration to be gathered from there. And also, I want to talk about syndications wherein people pool money and go for big projects. So, I wanted to introduce that to the audience today.
First of all, thank you very much for having me here, Kiran, and allowing me to share my journey. Definitely, I started as an engineer, like most of us from our culture. That's how I came to US. But in 2015, I decided I wanted to do something for myself, and I quit my job and I got my real estate license and started as a realtor. First 5 years in residential real estate, and then and I started working in commercial real estate. I loved it because it was a lot of challenges, and it also allowed me to be creative in how we structured deals. And when I started working with commercial clients, one of my client, when he was buying a retail strip center land, a land to build a retail strip center, he offered me this opportunity to invest. He said, okay, instead of taking your commission, why don't you just invest in this project and let your money grow further? I really like the idea, and that's how I invested in my first syndication project. I mean, he just did this with his friends and family. So about 15 of them got together, pulled in money, bought the land, and today they've gotten permits and they're going to break ground to start building a retail strip center. That led me to my next opportunity when I found like 25 acres in Manor, and I took that opportunity to this client of mine, and he said, oh, this land looks wonderful. Let's do a similar structure. And at that time, he said, you can also bring in your friends and family. So I started extending to my sphere of influence, and I realized there were a lot of people who wanted to do something, who wanted to invest in an opportunity like that. Because development projects can cost a lot of money and time and effort, but a lot of us don't have that. We wanted to be more passive in our role. So when people had that opportunity where they could invest in a development project without having to put in a lot of money or effort, a lot of them jumped on it. And this was in 2021. So that's how my first syndication project started. So me and this partner, then we did several other projects. We have about 4 projects ongoing in the Austin metro area. And I'm doing my currently the largest one, which is in Dallas metro, about 2,200 acres. So that's how
Okay.
my journey started as real estate. And today I do a lot of syndication projects too.
When I started in real estate, I was of the opinion that people who have a big portfolio always had deep pockets to begin with. I thought they were rich, but the reality, as soon as I started to learn that most of the big projects are done by private money, by people pooling their private money, and then they are able to take on big projects. So that is the biggest difference between people who don't end up growing their portfolio from being in small residential condo, single
Mhm.
family residential properties to something bigger like commercial property. We have a lot of commercial portfolio here in Arizona. We do commercial loans, and when I look at some of the loans that we are doing, we see that people are pulling in the money to do it.
Mhm.
How are people able to pull the money? Like, how do you trust people to put their money and hand it to somebody else? So that is what is called syndication. So we want
Correct.
to touch more on syndication.
Yes.
Syndication is a fancy word for
Yes.
what people have been doing it for generations, wherein
Correct.
they pool money and then they buy bigger property that they cannot otherwise manage or
Yes.
otherwise qualify,
Correct.
or otherwise they don't have the guts or the risk bearing ability if something goes south, right?
Correct.
Let's talk about syndication. Can you tell the audience how you guys have your syndication setup? Let's take your latest project that
Okay.
I am also part of, right? So
Yes.
we are doing this
Yes.
1800 acres, huge project. It's millions of dollars. So we all pulled in money. We bought the land, and then there is a lot of ground development happening. Explain the structure on.
Sure. So, I mean, any syndication, when people start, right, when somebody is starting a syndication work, they initially start with their sphere of influence, which could be friends, family, in my case, my client network. So that's how I started my first project. But then when we started doing this project, you also get a lot of connections. You meet developers, you meet builders. Because when we started our first syndication project, I know the land acquisition development or I have connection with Highland Homes builders, Toll Brothers, D.R. Horton, Meritage Homes, Century Community, Perry Homes, which are all like national level builders. So when you start building these connections, that's when you realize, okay, you can take the projects even further, because now you have people who are stalwarts in the industry who will come and partner up with you, or who will buy these, developed land or lots from you. So that's how I got the motivation to start my big project, which is our Dallas project. So we started accumulating land in one of the suburbs of Dallas called Greenville, where we started collecting from 300 acres, and currently we have built up to 1,800 acres. Of course, when this is a huge project, so it also it involves a lot of experience, right? You cannot you want to have the experienced people because you want to have a successful project. It is a lot of responsibility when you take people's money, and when you also project returns and you tell them, I want to help you grow your money or grow your asset further. So we brought in this developer partner, Urbanist is a very well experienced company. They have a lot of development, experience in development. They do BTR projects, they do commercial projects, they do master plan communities. And I've worked with them on one of the projects here in Austin. So I have seen their track record, how they work, how they achieve what they want, and what is the value add they bring to the table with all their connections and their funds and experience. So in our Dallas project, we brought Urbanist and we set up as a joint venture structure. So to give you a little bit of details on how the structure is set up, so we have our investors on our side, who pool in all the money to buy the land. So we buy the land under an LLC, and all the investors who invested will be shareholders in this LLC. So they'll all, depending on how much they contributed, they'll all hold an interest in the LLC. That's the owner of the land. Then we have a joint venture partnership with Urbanist. So Urbanist comes in as the developer. They use their funds to get all the entitlements for the land. All along, the land stays with the landowner LLC. Urbanist does not touch the land. They do not take any collateral on the land. They use their own funds. That's their capital contribution to this joint venture structure. So once we get the entitlements, now we have packaged it. We have land plus entitlements for a master plan community. So we sell that entire package to an institutional developer, and we get the land value back. Urbanist takes their cost back, and the remaining is split 50-50. That's how we set up the structure.
That is exactly what they do. They pool money together, and depending on the amount of money pledged or contributed by each investor, gets a percentage of the share of the company, and then that company as a whole is going to manage the project. Typically, the people who are managing the project, they tend to get the lion's share, and also they tend to charge management fee to the pool, which it should be fair and reasonable, because there is so much of time consumed in putting together this project and marketing it, getting the right vendors in. So so today what Swarna is describing to us is a classic syndication. So syndication is the power of community coming together, or like-minded partners coming together, wherein most of them, or maybe all of them except one or two people who are managing the project, invest passively into the LLC, and they're all limited partners, so as to speak.
Yes.
So Swarna, I know we both are not licensed attorneys. We are not financial practitioners. Yet there is so much of value when people like us, which is common man, we are going to explain it in very simple terms, how these syndications work, how the chemistry works, right? Do you have general partners and limited partners in your setup also?
Yes, we do. So because, like you said, like most of them want to invest passively because they don't have the expertise to make decisions, or do they have the time, to do that because they have their own life. So anybody who's investing passively, who are not the decision maker, who are not guaranteeing, anything for the project, like a loan, or bringing in a smaller share of money, those typically would be the limited partners or limited investors. The general partners are the people who will be the decision makers, who are running the project day to day, managing all the accounts, managing all the legal paperwork, bringing in the value addition through partnerships or third party vendors. And when it come up with the grand plan, right? Because every project has to have an exit. That's when everybody's getting their money back. So what that exit should be and how to execute the whole project, so that's all the work of the general partners. And that's why, all the limited partners have to understand enough about the general partners so that they can rely on their decision-making skills, on their expertise to execute the project successfully and make their returns.
I mean, that's well said. See, we had people invest in our enterprise for many years also. We do
Mhm.
private mortgages. People invest
Correct.
money with us, and then we in turn go and lend it out to people who need short-term debt.
Mhm.
That has been very, very successful. Customers like it because they, as investors, are guaranteed to get 8% or 10% that we guarantee, and then they get a lien on the property, right?
Correct.
So if the borrower doesn't pay, then they get to foreclose on the home and take
Mhm.
possession of the asset. Syndication and investing in land is slightly different, wherein you are not necessarily guaranteed anything really for
Correct.
that matter, right? So this speculative kind of investment, how are you able to bring in potential investors? What is your
Mhm.
how does your deck look like? What are the things that you talk about?
So here the underlying asset is land, because all the investors who are investing, they become partners, or or shareholders in an LLC that own the land. So there is an underlying asset. They're not just relying on somebody's track record. There is, something that if things go south, you have an asset to take over or an asset to sell. But that said, yes, when you were doing such a project, of large nature, where land is not cheap, especially if you're buying hundreds of acres, you do have to sometimes rely on the lending power, right? A lot of our projects, we did take loans, especially our projects in Austin. We brought in a couple of investors, and the rest we took loan. And we had some of the investors, including general partners, guarantee the loan, and the rest of them, just invested in it. And of course, we also plan for reserves. Depending on how long the project takes, we plan for reserves. And in the beginning only, when they give capital, we set aside money for reserves. These reserves will take care of the holding cost, which is the property tax, any mortgage payments, and any legal and accounting costs. As long as the project is done within a stipulated period of time, the understanding is, we work with the reserves. But let's say if something was not planned properly, or if the project took a little bit more time, then we always go back and explain the situation to the investors and ask for additional capital contribution. But that said, it's not just, you invest, forget about it for 4 years, and then somebody comes and tells you, okay, this is happening or this is not happening, give me more money. We have quarterly calls or half yearly calls, giving them updates on the progress. We form a WhatsApp group where all our investors are part of, so they can ask us questions or ask us what's going on with each of the project. We give them status updates. We also tell them, okay, let's say we plan, and especially in land development where there's so much uncertainty, because there's only so much we control. The rest, you have external factors like government officials and the market conditions. So when we have to re-strategize, we always go back to our investors and inform them, this is what's going on. So we are re-strategizing. What do you think? And if they feel they're all confident, then we take a vote and go in that direction. But a lot of it, yes, it's general partners who make the decision, and because of the underlying asset, there's always some protection there. I know in 2021, 2022, with the interest rate increase, the reserves and a lot of the syndication projects, people had to go back and ask for capital. And also because market was not conducive for sale. So we took a lot of that learning. And our latest project, we decided not to do any loans. We are completely buying it all cash. That way, there is at least a holding cost is very minimized, and the asset is held free and clear of any loans.
Yeah, no, that is very smart. So when I say syndication, when we are talking about that, right, it's not always happy ending to this project. Sometimes there are cases wherein the project will run out of cash, especially
Mhm.
when people who are running it don't have ample experience in executing it, or if they would have taken a fancy loan wherein it's going to have a balloon payment due
Mhm.
after some time,
Mhm.
or it's just mismanagement. Combination of all of that could also lead
Understand.
to
Yeah.
lead to a lot of losses in this.
Mhm.
One of the most recent losses that reminds me is in Texas. I heard that there is a guy who pulled in money. He bought like 3,500 apartment units, and then they had a capital call because the loan was resetting. At the same time, the rents went down, or they had a lot more vacancies
Mhm.
because the property was not maintained properly, and then the tenants just started leaving in droves,
Mhm.
right? So how to protect the investors?
Right. See, first thing to know is every investment has its own risk, right? When you're getting an investment where there's less return, it means there's less risk, less to
Let's
moderate risk. If you're seeing an investment where there's really good returns, like you can double or triple your money in 5 years, if they say, that means there's going to be a certain level of risk associated with it, and that's what we are all signing up for. Like when we are doing options trading, people lose money, people make money, and the idea is you balance it out somewhere that at the end of it, it's not a too much of a loss. Your net gain is still positive. That's all we hope for. Same thing with invest syndications too. Of course, you have to always do your due diligence, just like any other investment. When you're investing, you have to see what their plan is. Yes, sponsors track record is important, but more important, what is their plan? What is their risk mitigation plan? Especially risk, when it comes to risk, how are they planning to mitigate those risks? Those common risks of, okay, what if market turns south? How do you manage things? What if the property does not perform well, has high vacancy? How do you manage? So those kind of things you always ask for your fallback plans. And the second thing is constant monitoring. There are a lot of people who invested money but who didn't know what the investment was about, or didn't ask enough questions. So it's all about asking questions. Always ask questions. And even not only in the beginning, even after you invest, every quarterly update calls, half yearly update calls, go to the calls, ask them questions. What's going on? If things don't look good, okay, what is your fallback plan? What are you expecting to, how are you planning to
So
re-strategize?
what
How
is
are
the
you?
fallback plan? Let's say an investor, they invest for 2 years, right?
Yes.
I'm sorry, I'm making this role play. Didn't mean to put you on the spot, but I wanted to bring out a lot of the options that the investors have, because
Yes.
I've seen it happen myself. So the investors invest, and let's say there are no updates, or the general partners pretty much disappeared with the money. So what can the investors do?
That will be a situation which is pretty hard to recover from, because if somebody is not responding, or somebody's your money, you don't have accountability for the money, it's going to be hard, right? But let's say if it is just they didn't plan for it well, or there are losses happening because sometimes the sponsors are still working, but it's just the conditions are so bad that it's hard to recover back from something. So in that case, you pretty much it's mostly, okay, I recoup the money by just selling the asset? Can we sell the asset, take the asset to the market, and
So
whatever
can these
result got.
limited partners regroup and say, okay, you know what, the general partners are unable to manage this project. So, okay, out of these 500 people, okay, 10 of us, let's regroup. We are limited partners, and can they take over the general partners?
They won't be able to do that because there are stipulations set. There are stipulations set in the documentation. There'll be a bunch of documentation that people sign when they invest. So that will restrict them from taking over. But what they can always ask for is, hey, I want to exit out. Every investor has an opportunity to say, okay, I am not happy with how things are going. I want to exit
But
out.
who would buy their shares if it's going south,
Correct.
though?
Nobody is going to buy the shares, but if
Right.
20 people together asked, now the investor
Or
has a
maybe the
responsibility.
general partners could buy them out.
Yeah, the general partners could buy them out, or the general partners, when many people are asking and they don't have enough capital in their bank, they will have to sell the asset. How do they return those money?
Right.
How do they entertain that request? Okay, these people want to exit out, so that they have to help sell their shares, or they have to sell the asset and give the money back. So more people asking that would probably put the general partners in a position to at least take the asset to the market instead of trying to uh, do more damage. So
Right.
that's one way to go about it.
Bottom line, guys, if you're scared about putting money into risky projects, then it should be an informed scare in the sense you have to
Exactly.
be able to understand what the project is about,
Correct.
what potential it has, who are your general partners, what are their credentials, what are their experiences,
Right.
and then you jump in. If you're scared about investing about something, it might be worth it for you not to go for it, because you don't have to invest in each and every project that comes on your desk.
Correct.
Even for us, when we do the mortgages, we don't lend money on each and every property. We are picky and selective. So
Yes.
you, as an investor, can be picky and selective and go with it. So Swarna, for the project that we are doing together in Texas, right?
Mhm.
So that one, I like the structure how we have it, wherein the minimum is around 45,000 people can put in. It's an 1,800-acre project.
Mhm.
But then people in this group, if you want to combine together and if you want to invest together, then if you invest up to $180,000, then there is different rate of return for that.
Correct.
If you guys need more information on that, reach out to me. I'll be able to arrange a special meeting. As mentioned about, it's in Texas. It's 1,800 acres. It's a horizontal development project, meaning that we are not going to build anything on it. We are just going to get the land, get all the utilities and the amenities to it, and then the exit plan is to flip it and sell it to a big developer.
It takes at least 3 years to get the entitlements, and then we plan our exit. A project of this value, because it's hundreds of millions of dollars, you're not going to have a buyer close in 2 months or 3 months. It could take 6 to 12 months for a buyer to actually close on the entire property and purchase it. So that's why we plan for an additional year. So about 4 years exit. And one more thing I would like to add, to your last point is, when you're investing in syndications, you don't want to take money from your rainy day savings and invest. It should be your disposable income. It should be your money that you are not going to worry about for the next 5 years, because
Yes.
only then you'll also have less stress. Otherwise, you're going to be really stressed about investing into such projects, and it's not worth it. Always use your disposable money, because I mean, the idea is also, if let's say you have to take a loss, at least it's not hurting you. It's not hurting your lifestyle. You still have your rainy day savings intact. So syndications, yes, they come with their risk, but that's why they're giving you really good returns too. If the projected plan works out really well, you make 2x, 3x money in a short amount of time. So understand your risk, ask the right questions, and invest your disposable income into these kind of projects.
Yes. So, Swarna, I want to wrap up.
Yes.
Before we wrap up, I want to tell you guys, if you want to learn more about the project in Texas, wherein there is 1,800 acres that I've personally invested in, along with Swarna, we are buying this big land project. Let me know, and I can arrange a dedicated private session on that. Then we can talk about it. Lastly, I want to leave you with this thought about how I did it. When I used to work at Intel, I used to have the 401k. That 401k, I rolled it into an IRA. With that IRA, I purchased a condo here in Phoenix. And then all the rent that I get from that condo, I've been putting it back into the IRA. And that money is left there. So that money is what I'm now putting into Texas. So if you have an old IRA, if you want to know how you can roll that IRA amount into this investment, I want to do another webinar with one of the IRA experts, so I can bring him in, and then we'll talk about it. So you can use that money to invest in private mortgages or a project like this. So with that said, Swarna, do you have any closing comments?
No, I mean, you had a very great thought, because yes, your retirement money is sitting right there in your retirement account. Probably stock market being so volatile, you're not seeing enough returns, or you're worried about the growth of the money sitting there. So here's an opportunity through this IRA funds where you can invest in project, and all that returns you can defer your taxes because of the same IRA concept. So I think that's something that we are approaching a lot of our investors with, and they really like the idea. So, if you like it, reach out to Kiran.
Yeah, and then for
Thank you.
IRA, see, you like it or not, stock market is like a big pendulum. You don't know how the returns are. It's unpredictable.
Exactly.
So it's always smart to diversify. So you diversify from stock market, put some in real estate, put some in private mortgages. You diversify, and that's how you increase the chances of you being
Exactly.
successful. So that's what it is. I'll catch you again next time. Thank you very much, Varna.
Thank you, Kiran.